On the screen of this second video, you see the reconciliation problem that I gave you back on March the 8th. As I said in my note to you on your course page, some of you had some trouble, and I want to make sure that you are clear on how to do this important process of reconciliation. Before we get into it, though, just a brief synopsis of the basics of a checking account. As you know, or as you should know at any rate, a checking account involves basically a promise to pay money that you have already deposited in a bank. So if you are 18 and you go to your local bank and you open a checking account, you need to first deposit some money into it. They will give you some checks to write, and they will give you a check register, which helps you keep track of that checking account. When you write a check, it is basically a promise to the person you're writing the check to that they can cash it and get the money that you owe to them. For example, let's say that you do have a checking account and you have decided to send me, your teacher, a check because you are so thrilled about taking this personal finance course. You want to send me a check to show your gratitude. Aren't you nice? So let's assume that for some odd reason you do that. You send me a check. Now, I live in Toledo. You live in either Sandusky or Fostoria. Now, once I get your check in the mail, it does not mean that I need to go all the way to Sandusky or to Fostoria to cash that check in your bank. I could do that, but I don't have to. I have a bank account here in Toledo. So I have a checking and a savings account, let's say here in Toledo. So what I will do is take the check that you send to me, I will take it to my bank here in Toledo, and then I will cash it. My bank basically will send that check. It's a bit more complicated than this, but basically my bank sends your check to your bank. And your bank takes money out of your account to reimburse my bank. That's how it works. So eventually, then your bank tells you, by way of a bank statement, that I have cashed the check and I've gotten the money that eventually will be taken out of your account in your Sandusky or Fostoria bank. So that's the steps. You send the check to me or to a company or to anyone else. I cash it at my bank, wherever I am, and wherever the company is. That bank, my bank or the company's bank, sends the information to your bank. Your bank reimburses my bank and then takes the money out of your account. That's the steps. Now, reconciliation, as the video showed, if you watched the first video, you saw an actual check register and a bank statement, and the steps involved brought them into agreement. And that's what that really means. What you're really doing is making sure that your check register that you fill out agrees with what the bank says. Now, let's take a look at this reconciliation problem from last week. On the screen, you see that the instructions say that you need to reconcile your checkbook with a bank statement. Use the information below to complete the reconciliation. And then you had some questions. What I've added to the right here is the information that I've given you right here. Your checkbook shows a balance of $400. Okay? So, your checkbook, let's pretend we're at the end of January. January 31st, you have this balance in your checkbook of $400. This is what you think you have, $400. Now, the bank statement is dated January 20th. That's not unusual. Typically, about the third week of the month, the bank will send out statements. They do this either by regular mail or by electronic mailing. So you may get an email with the bank statement. And it may be dated differently than your checkbook. So your checkbook is dated January 31st, says $400. The bank statement, which was completed by the bank on January 20th. They mail it to you, you get it a few days or a week later, but the bank says you have $830. Now, the mistake would be simply to change your checkbook to 830, which is not what you want to do because of what the information shows on the left side of this problem. So, this information is important. Checks that you wrote and you recorded in the check register of your checkbook but are not shown on the bank statement. Why would that be? Well, you wrote a check number $308 for 308, check number 308, excuse me, for $90. You wrote it, it's in your checkbook, so you've already deducted $90, and the ending balance is $400. But you've already put it into your checkbook, but the bank doesn't know about it because maybe it wasn't cashed yet. Maybe the company, the person who you wrote it to, didn't cash it yet, so the bank has no idea that you wrote check number $308 for 90. Excuse me, check number 308 for $90. There are two more, check number 311, check number 320. These three amounts are all outstanding. So the bank eventually will get them because those companies or those people will eventually cash those checks for 90 and 25 and 170. So that's why we need to deduct. So over here, we will deduct $90 and we will deduct $25 and we will deduct from the bank statement $170. Okay? Now, that will give a total of, if you know how to use Excel, you can do this, that will give you a total of $545. Okay? Now, that means that eventually these three checks will be cashed, and that reduces your bank statement to $545. Now, we're still not in agreement. We're still not there yet. Also, on the left side, these are, and I'm going to get a little bit more involved than the video you watched previously. Okay, this will show that you made a deposit, but it's not shown on the bank statement. Why wouldn't the bank know that? You made the deposit. Well, again, the bank statement, if you go back up here, was constructed by the bank on January 20th. Maybe on January 25th, you made that deposit over here of $50. So it's in the bank, but it's not shown on the bank statement. So in this case, you need to add to the bank statement because you know that eventually the bank will get that caught up. They have your money. They're going to add it to your balance. So we put 50 here, and we will add to the adjusted bank balance. And that gives a total of $595. This $595 is the final adjusted bank balance. We've subtracted the checks that we know will be cashed, and we've added the deposit that the bank eventually will put into your account as far as your total balance for the bank, giving you $595. Well, we're still not in balance here. Your checkbook shows $400. The bank now, after we've adjusted it, says $595. So let's look over here again on the left. The deposits shown on your bank statement, but not in your checkbook. Okay, here's a direct deposit of your paycheck, $200. So you have set up with your employer direct deposit, which means they don't give you a check at payday. They simply put it directly into your bank account. Well, apparently you did not put that into your checkbook. So these are deposits that are on the bank statement. You look at your bank statement and somewhere on there you'll see that. You'll see that there's a deposit for $200. Well, if you have not put it yet in your checkbook, now's the time to do that. So let's put in $200, and that gives you, obviously now, a total of $600. Well, we're still not in balance yet. We're getting close. The final thing to look at are bank fees, and this is very common. typically a bank will charge you fees for maintaining that checking account. There could be any number of types of fees. In this case, there's a fee of $5. So apparently every month they charge you $5, or maybe $4, maybe $3.50, it may vary. But this time it was $5. So they have it, they show it on their bank statement. It's in the bank statement someplace, you see that. That's part of what they've already put into that initial balance. So if you have not deducted it from your checkbook, now's the time to do that. So you will have to deduct $5, and you can see what's going to happen. When you add that, or subtract that, excuse me, you'll come up with $595. So you have now adjusted your checkbook, you've now adjusted the bank statement, and they are in agreement. So this is called reconciliation. You have reconciled your checkbook with the bank statement. This is what you need to do every month. So once again, these are the steps that you need to understand. Some of you had some difficulty with that. It might be good to keep this video handy along with the one previous that you looked at today, just to make sure that you have in your mind how this will work. And it's important, if you begin a checking account, to keep it accurate. Obviously, this has to be done on a regular basis, and it's typically done as soon as you get your bank statement. And in this case, the bank statement was mailed on January 20th, and you may have gotten it a few days after that. But by the time you do the reconciliation, it may be the end of the month. So you need to change some things in your checkbook, and you need to make some adjustments with the bank statement to make sure that when all the checks are cashed, when all the deposits are recorded, everything is going to balance out, and you are in agreement from your checkbook with the bank statement. Tomorrow you'll have another problem similar to this, and we'll see if we can make sure that you can reconcile a bank statement. After this video, back on your course page, you'll have a couple questions that will pertain to this. So let's do that now.